In this video, I'm going to show you a very simple but effective strategy that works at least 70% of the time. Now let's get straight into the strategy. The first thing you want to look for is a higher time frame fair value gap. After you identify that fair value gap, you wait for price to come back into it. Once price returns into the higher time frame fair value gap, we then drop down to a lower time frame. On the lower time frame, the very first thing we look for is an SMT divergence. After we get the SMT divergence, we then wait for a market structure shift. And after the market structure shift, the next thing we look out for is a fair value gap. If price leaves behind a fair value gap, we then set our entry from that fair value gap. Our stop loss goes just below the SMT low, and we target a 1-to-2 risk-to-reward ratio. Now let's quickly talk about time frame alignment. When you're using the 4-hour chart as your higher time frame, your entry time frame should be either the 1-hour or the 15-minute. But if the 1-hour chart is your higher time frame, then the 15-minute or the 5-minute becomes your entry time frame. Now here is the checklist for this strategy. First, you wait for your higher time frame fair value gap. After that, you drop down to the lower time frame. The first thing you look for is an SMT divergence. After the SMT divergence, you wait for a market structure shift. Then you wait for a fair value gap. And finally, you target a 1-to-2 risk-to-reward ratio. This checklist is exactly what you should follow when trading this strategy. Everything must align before you take a trade. If it doesn't align, then the trade simply isn't for you. Follow for more.